Hi, everybody. We're back with another market update. Greg Fox, grain marketing specialist with the Louisiana Farm Bureau Marketing Association, joining us once again. Greg, another interesting week and a half since we were last together. The markets went down on Wednesday as we're recording this, but this is after days and days and days of higher prices, especially for that wheat market.
Yeah, wheat finally took a break and we saw it trading lower. Last time we saw July almost $9, and within that time frame it went up to 12. We've seen the market leave July and go to December futures. So new crop purchases for the Louisiana area, all those traders, all those companies left of July, went to December to manage that position a whole lot better. And since then, we've seen the last couple of days, we've seen limit down moves on the wheat, which is kind of what we want to see now. A lot of folks are hedged over July futures, and to sell that grain now over December, you're going to want to roll that down. So that spread is what we're all looking at now, and it's come in quite a bit. It was around $2, and now it's about $1.40. So that's good for us. We want to see that. But now we're trading over December at $9, which isn't horrible, but it's not what we were seeing earlier in these markets.
And so one of that, it kind of answers this question about how high prices are. You mentioned that we want to see the prices come down, even though we're marketing grain for farmers. And the reason is because it has to do with who's buying at that prices. Is that right?
That is correct. What the market was seeing in these July futures with these big runs because of the Russia-Ukraine situation, you're seeing the export market kind of leave. You're not seeing the commercial traders out there buying it. You're seeing paper traders, speculators, what really moved this July market up high. So the commercials kind of took a back seat and moved to the December, because if they're buying this, they've got to sell it. The only option right now for them to sell is over December. We're not seeing any export bids right now out of the Gulf for July futures.
And still we saw that increase in prices, but again, there's still that spread, especially in beans right now. That is a $2 spread we've got going on. How much are these prices being affected by wheat, and how much are we hearing from South America? As I understand, they're thinking about like almost a billion and a half bushels down from their earlier estimates.
Yeah, the report today showed Brazil at 127, and last month they were 134. So we saw a big drop there. A lot of folks were expecting it to be anywhere from 134 to 121. The average guess was 129. So it came down as low as they were expecting it to, and we saw the market kind of flat on the bean side. China, they're not buying as much as they've had in the past. Their mill usage has dropped off a little bit. Some folks are saying that the hog production is not quite where it once was, so that's the reason we're seeing that mill usage lower there. And so it was just kind of flat. It feels like the market was already expecting that and has traded it for quite some time, so we really didn't see much of a change, especially for new crop. Old crop, it did drop. Not a whole lot of beans left out there, so that export market is trying to buy up all the beans that they can, and I think that's one of the reasons you're seeing such a higher old crop than what we've typically seen in the past. And yeah, we usually don't see these kind of spreads from old to new, but that's what we're seeing right now.
And so when we recorded this the first time on that Monday, it was like the Monday after the invasion, 3 or 4 days. We're on day 14, 2 full weeks afterwards. I mean, it's looking like even if the farmers were to be able to get into field, that wheat isn't going anywhere. And with all the bans on Russia, that's a fully 20% of the world's wheat crop. Is that right? That comes out of those two countries?
Yeah, this is the first time we've seen two ag powers kind of at war, and that impact that it has on the world market. So yeah, as we go forward, we're definitely going to see the strain on the wheat shipments out of that area. Obviously, I don't think we're going to see a whole lot. Exports would be kind of reluctant to send a ship into a war zone. So we'll definitely see how that plays out going forward. Some countries have started rationing their wheat supplies. You've seen Egypt and some of those places pull some of their wheat tenders and are willing to ride this out and see what happens. The Australians look like they're going to have a good wheat crop this year. So in fact, the world carryout on wheat actually improved. So it went from 278 to 281. So we saw an increase in wheat. Now that's wheat as a whole, not different varieties. So some folks were thinking that we went into a rationing mode too soon on the wheat crop because of the war. Obviously, we'll just kind of have to wait and see how that plays out.
So we already had a carryover, as what Greg is saying. We already have wheat on the market, and consumers should be aware of the fact that there's plenty of grains out there. It's not like all of a sudden this stuff disappears overnight. Even without Ukrainian and Russian production in the market, we're still going to have plenty of wheat around. It's just that this is affecting prices right now.
Correct, and just global supply. You know, those EU countries, you know, if they were buying out of the Ukraine or even Russia, you know, where are they going to get those supplies now? So again, a lot of folks have decided to wait it out, see what happens, ration some of their supplies, and even countries that have surplus or stockpiles, they're going to start releasing some of those out to eliminate some of the shortages in those areas.
If we see this continue, and if we see the cut in production, let's say Russia and Ukraine for unviable as markets, what effect is that going to have next year as we start to, you know, longer term? What impact is that going to have on not only the wheat markets, but on these other grains that are there?
You could see where wheat prices for 23 futures start to come up a little bit to entice planting. That, I think, would be the first thing, higher prices to get more grain in the ground. Obviously, that would impact corn. Corn and wheat tend to trade with each other within, you know, right now it's fairly high, but they tend to stay within each other to a degree so that wheat doesn't become a feed commodity. You want to see corn as that feed commodity. So then I think you would see corn prices start to, you know, up a little bit for next year's wear to ensure that you're going to get that corn production. I think for soybeans, it's going to be more South America, their issue, than what's going on in Russia and Ukraine right now. If, you know, we have a short crop this year out of South America, then it's going to put a lot of demand on what we're going to plant this year and cut into our carry out, and then obviously that'll dictate what we need to plant for next year.
That's all a lot of stuff. It's usually that WASDA report, that World Agricultural Supply and Demand Estimate, is usually the big deal in the markets here, but now there's just so much every single day.
There's so much, you know, right now, again, it's such a global market that we're looking at. And the March report sometimes is kind of a flash in the pan report. I think the trade was really curious about what South America productions were going to be. March 31st is the one that they're really looking for, which is planting intentions for the U.S. You know, right now you're looking at 88 to 89 million acres of soybeans and 91 to 92 corn is what they're projecting. So it still proves that corn is king even with these fertilizer prices. So that, I think, is what the trade is now going to focus on, and that's typically the big one for the month of March.
Well, we still won't know until that report really where we kind of are on planning, and even then a lot of farmers change their intentions as soon as that report comes out. But I think with these prices, it's safe to say farmers are going to want to get in the field and plant as much grain, whatever they choose, as they can. Is that right?
Yeah, we're seeing good basis levels. Again, the base is what the elevator's offering to go there. For soybeans, we're seeing some really strong numbers. Same thing in corn. We're seeing some good numbers for corn as well. So, you know, it looks good right now. You know, even down 11 cents on corn at $6.62, that's still a fairly solid price when you compare to what we did last year. Obviously, that fertilizer cost is going to cut into that, so you're probably net what you did last year at these price levels with your inputs, but overall, it's still very good for us.
And finally, do you think that Louisiana farmers are going to have an advantage being so early pulling this stuff out, whatever they grow, because we're going to be the first to deliver into a market that may be hungry for it?
Soybeans especially, you know, we have that new crop that comes off in August, September. You know, those August, early September beans kind of fills that gap from what's coming down the river on old crop. And so the elevators like to get those fresh beans, that new crop beans that just kind of help string those barges along and make them go a little bit further. So yeah, we typically see a little bit of an advantage for our early harvest.
All right. Definitely living in interesting times.
Yes, we are.
Well, thank you, Greg. And we'll keep you up to date with as much information as we get when we get it. Thanks for joining us.